Okay, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for February 11th, 2021. And let's get this started. Got a fly buzzing around here. All right. So today was the, I would call it probably the third day of indecision. So what we had a slight gap up, sell off, and then a recovery into the day for a fractional gain in the broad market. And so the pricing action of the last 3 days has taken on a decidedly different characteristic than the previous move, which was, harsh sell off with volatility, large volatile move to the upside here. And now kind of what we have is a couple efforts to fail, but hasn't failed any further. But now you can feel this has taken on a kind of a sideways topping type of an action. And so we noticed, fine, just can't take it. Got it. All right. So if we look at this a little more closely, what we were concerned about with before was the RL10 during this entire run-up. The RL10 was underneath price the whole way, and then starting in here, it closed above the price action, and so we were a little worried about that. We said that could be the case where the regression line is showing that the acceleration is over. Now the price is below the RL10, even though it's slipping up. It could be a marker for a turning point. So what we've actually had the last 2 days is then expanded range, but sideways direction. Now, the RL10 turned to summer on that day and still has accelerated to the top, and there's still a little buffer between the RL10 and the baby dragon, but price hasn't been following through, and today had a lower high. And the fact that it's an inside day, meaning that the high is lower than the previous high, and the low is higher than the previous low, means it was contained inside yesterday's price range. So there's no new information about price discovery, about which way it wants to go. And that compression now starts setting up, moving towards a decision point. So if you put something like this on it, you would see, oh, we're coming to a decision point somewhere around this line. That, we might say the break point might be something like at 390. And is it going to break to the upside? We would know that tomorrow if it breaks above this high or that high and beyond. Or is it going to break to the downside? In which case the markers become today's low, the peak of the dragon, 2-day low, Z1, and so forth. So we're getting this critical state starting to develop as we get a change in the character of price action. And that's what we want to do. We got an early alert on that by looking at the price relative to the RL10 and just noticing that subtle difference between was price above or below that RL10. And so this was the first alert that maybe something else was going on. So it looks to me like this price action in here is taking on that sideways chop and trying to get a critical state. So you notice that there have been large moves in both directions as the bulls and bears are tactically jockeying for position. Well, that makes for a very good intraday trade. It's brutal for swing traders that are experiencing that because you're getting wide price moves, but not directional moves. And so this is the reason why that 2 ATR stop is needed to protect you against this kind of indecision as it comes into the station, if you will. So this feels like, you know, a box that it has to break out of this box now, something like that. We would want to see if we called that something like a yellow zone. See a breakout. It probably takes a breakout above the, you know, the all-time high to get a clear directional signal. Whereas I think on the downside, I would take the, you know, the skin of the dragon as the first alert that this thing is could be going south. So until it breaks out of that yellow box, I don't think we know anything. And then we have the usual measurements of performance, the indicators. So we got, you know, skin of the dragon, the Z1 price level, spine of the dragon, lower skin of the dragon, Bollinger Band mean. So a reversion to the mean would be a $10 move back to 380, which is about 3%, which is about a little over 2R. So a 2 ATR protection stop right now would be something like around the base of the dragon right here. So there's plenty of room to protect against this noise. But if you are a tactical trader, an intraday trader, you know, you're building positions off much tighter stops on shorter time frame bars. But in terms of the swing trade, this would be the 2 ATR protective stop, hung from high, the highest high while we're in the trade. Personally, I think the, you know, my stop on swings would be down here around the edge of the dragon, because I want to have larger positions but tighter stops and get these short-term burst moves with a larger position size, and then cycle out of this this kind of trade. Okay, so that's what I want to say about that. Otherwise, all systems go. All right, let's shift to the sectors. Let me know in the comment section or the question if that was clear and helpful. If I was clear on how I'm using those indicators. All right, so the S&P today finished fractionally up at 0.16. The Qs were strong at 0.55. Diamonds were down at 0.06. The Russell was off slightly at minus 0.11. So pretty tight range. Treasury's down 0.55. Now I've added another symbol to our U.S. index stack. So this one, DWCPF, tracks the Dow Jones market completion index. So if you took the S&P 500, DWCPF is everything else. So when you take those two together, you have something like the total market index. So if you took the total market index minus the S&P 500, you would end up with this one. It's predominantly small caps and mid caps. So it's actually been outperforming IWM. So because it adds some mid cap robustness, and because it's one of the symbols in my my Thrift Savings plan, I've added that now to consideration for the U.S. indexes. So that's what that means. Okay, let's look at the upside. Okay, the sectors that outperform. So healthcare fractionally better, ARC Genomics fractionally better, Japan fractionally better. The FANGs up 0.6, Brazil 0.7. The lithium batteries and then ARC Innovation up 0.9, emerging markets 1%, 1.1. Tech, S&P Tech 1.1. Simon Property Group, which is the commercial real estate, 2.8, 2.9. Ethereum crypto 3.1. Blockchain ETF 4.4. Bitcoin itself 6.8. Now the companies that did well. working our way down from the top. Virgin Galactic, 13%. So a great volatile daily intraday trader, continuing to reward the team. NVIDIA and Squarespace and the disruptors. Squarespace is at finance disruptor. NVIDIA has won the chip wars. Twitter, another follow-through day, 1.17. Yesterday was a big day, and it gained a little bit of momentum today. Tesla, after getting smashed early, had a little recovery of almost 1%. Yesterday was a tough day for Tesla. Microsoft, U.S. Steel, and PayPal all turning in good performance, as did Cliff. Sectors that underperformed. So we had materials at 0.1, silver 0.08, discretionary minus 0.3, finance minus 0.32, staples minus 0.44, oil and clean energy, between minus 0.8 and minus 1. Mexico minus 1.1, S&P, biotech 1.3. So ARC Genomics is starting to exert its dominance again. Energy itself 1.54, oil exploration minus 1.9, VIX minus 2.3. That actually had an intraday good gains. I was tempted to harvest it, did not. If I was sharper, I would have cashed that today because it was up about 2% before closing minus 2. So it was a volatile day. Wheat and precious metals minus 2.6, and then the marijuana sector not chilling today at minus 6. So lots of things to choose from today. I like the strength in the usual suspects: Lit, ARC, emerging markets, tech, and the Bitcoins. All of that feels good as the disruptor technologies that are working. So I'm liking that. Let's shift to the daily reports now, and then we got a couple case studies to work on. All right, let's see. All right, so we've seen the daily. Yeah, I just really want to reinforce the fact that that feels like a change in the character. That almost feels like this moment here, where you had some recovery moves and then sell-offs. I'm going to show later in this report, why the moving regression lines are giving us some insights about a turning point now as well. All part of the market mosaic. All right, so we're still bullish normal. That's good. Overbought on everything except the 2-day, which is improving slightly. That's good for the long side. ADX has drifted back to neutral at 17. ATR percentage at 1.36. And now we are into risk on finally, after a long period of suffering in here. We're now into the summer on risk Z, favoring the long side and justifying swing trades on breakouts. No signals from channeling an overreaction with the strong price movement we've had. So we're near the top of that 10-day range. As you can see, we've been now overbought for 7 days. Min Pain and Max Pain's little change. Still Microsoft and Coke looking good, along with Disney. And Max Pain's Amgen's just suffering and can't get it done. Cisco, United Health, and Walgreens. Tesla in the Max Pain's once more. Yeah, I just think there's some qualitative change in how the market's looking at Tesla now. It's not the surprise story anymore. And Edmunds.com, well-respected independent car assessment company, had done some EPA-style testing of Tesla and found them among the lowest-rated cars in terms of being able to match their stated range performance. In fact, I think it was 4 or 5 Teslas that they tested, none of them came within 10% of the stated range that was available under reasonable test conditions. And so that is starting to, take some of the shine off Tesla for its engineering excellence. Meanwhile, the conventional car maker companies were basically outperforming in terms of their claims and actual ability to deliver. Especially noteworthy was Audi and Ford. So Audi is well renowned for good engineering, and there's your European market. And Ford made some impressive gains with the way they've retooled the Mustang. So there's some competition stiffening now for Tesla. Okay, shifting to the daily, a bunch of dojis today. No pattern signals because we're so near that 10-day high. And then only 2 symbols test out well on the auto framer, and that's silver at 4.9 and treasuries at 2.3 to 1. We did have breakouts, though, in emerging markets. That's good for that alternative to the U.S. trade. They are still the dominant player. Asia less Japan and Japan both had breakouts, maybe not quite as good as emerging markets, but the breakout nonetheless. And then S&P Tech had their large breakouts in every time frame, doing a little better than the Qs in that regard. So again, not that much to choose from, but those EEM and Tech seems to be the leaders. In the Dow 30, you've got the more dojis. You had a breakout in Disney to the upside, big breakouts. A nice 10-day move here in Intel at 126, so there could be some more momentum longer term available. You have 15DD in Verizon, and you have a triple screen in Amgen. That's one that's just not falling through. We set that up as a recovery trade. So if we looked at Amgen, just want to stay connected to this as an idea. So when we look at this rascal on the 3 months, what we originally saw was this move back here in this box down here. We said that might be the low, and then it felt like it could recover from here and then start working its way up the ladder back into this region at the top of this box. And we're looking for like 260 with the possibility of a big run up to 275. So we saw that potential in here at a support level that had been the base here for this long, strong move. It had recovered all the way back to here and then started stabilizing and failure to fall further. But we haven't seen the rebound move. In fact, it's just been sort of miserable and sideways, and now actually today showed some weakness. Now, it hasn't violated the bottom of that first support box, but if it falls out of the river at something like 232, then that's a clear, 231.50, that's a clear short. And then even a breakout below today's low at 234, I think you could get short and just say, it's had 7 days to follow through. It hasn't. It's starting to roll over. The fall turned into winter and now the RL10 is rolling over, that's a collapsing dragon setup. And if that fails, then we would not be surprised to see it come down and test the bottom of the dragon over here. So we would be looking for an initial target on that breakdown of something like from 230, call it 232, down to 224. So that's about an $8 move on 200. So that's about a 4% move is available. Actually, I'm sorry, from 234, because we would want to get short on this breakdown from 234 down to 224 is $10 on two. So that's 4% move just to the Z1. Yeah, I mean, you can add a second position to Z1, and then you're essentially going to Z2. Then if that breaks, then it's you can see here that we've got considerable support in this region, and so then if it breaks below, if it breaks here and you're short, add a second position here, and it gets to this region and stalls, well, then you just cover. But if that breaks, now suddenly this entire support structure breaks and it's look out below. So Amgen is in definitely a critical state. Now the upside move that we forecasted is still there. And you can see the dragon getting narrower. And so a breakout above, call it 240, still is a reason to get long because you have a tight stop and the ability to get back to 255. So that's still a good move. That's what a critical state looks like, is a larger than normal move in either direction with equal probability-ish. And it'll make that move in a short period of time because you'll get this kind of expansive, explosive move like you saw built in here. So Amgen is cooking and getting closer to the day of decision. That's my read on Amgen. Let's get back to the report. Yeah. Okay, so that's the down 30. Anything else to look at that? No. In the auto framer, just 3 symbols: silver, Merc, and treasuries, testing out well. Here's your framing data, the usual. Amgen is still in there with framing data. On the squeezes, still a reasonable number of squeezes. I immediately see Microsoft at 2.2 to 1. Amgen ready for a squeeze breakout. I like Apple even though it's only 1.9, just because. I'd add McDonald's in there too. And then this one I think is the gem. The technology had a good day today, but it's also ready to pop. So if we looked at tech, yeah, a relatively small range today, and it closed very well. So that's like an instant long. The instant that thing breaks out, off it goes. And I don't think I think you get short at a 1 day breakdown. So you got about a dollar stop on the breakout, and then I think the upside we're looking at is probably 140 up in here. But that's as nice and strong as you could ask for. Got clear breakouts from that long, clear breakout from this long consolidation. Here's a consolidation base in here, and still going strong. So tech, S&P tech is rocking. If it does break down, what we're looking for is a return to the Bollinger Band mean, somewhere around 130, 180. So that's about a $5 move. So if you can manage a dollar stop, it's 5 to 1 to the downside. The usual Four Seasons. I want to just highlight the companies that did really well today: Visa, Salesforce, Disney, and Intel. Amgen, Verizon, 3M, and IBM, not very impressive. 3M, big breakdown today. Let's see what that looks like. Yes, indeedy. So here's a case where you have that nice support base inside the dragon. It gives you a nice grinding move halfway back up the stack, and then today it collapses. So that feels like a brand new opportunity. So I would take that short at a break of the dragon and the PSAR. And, your target is at least the Bollinger Band mean, and then probably Z-1, which gets you back to the base of the dragon. So I think the trade opportunity, if that thing collapses, would be you'd be looking to capture that move. And your risk box would only be small, something like spine of the dragon into here. So I think you get short right there. I think your stop, it's here. And then this is your opportunity. I'm going to make that red, so reference it tomorrow and in the days ahead. That's what you're hoping to capture, that red box, aiming for here. But you would be willing, I think, to take halfway. If it got halfway and started to stall, you'd cash that. So where would I add a second position? I think I would probably add it, I think like right there, because I want to be below this little cluster. I think like right above there at the fair value, the collapse of the fair value. Okay. In the ETFs, the winners today were the globals: Japan, Asia list, Japan, emerging markets, plus tech. So today was much more global day, plus U.S. tech, and everything else in the U.S. was suffering. But you can see the suffering up here in all the XL series, all underperforming. And Treasuries just reverting to form again. No love there. Normal in the market mosaic. Here's the one that I want to study a little bit today. Today's kind of chart lesson. So the Z-scores. So we're looking at the Z-scores of 3 regression line slopes over the last 180 days in the S&P. Here's all the text that explains the math behind this. So the red line is the slope stack, is the slope of the 90-period regression line, expressed as a Z-score, using the last 180 days as his reference. And the Z-score of the 30-period regression line is drawn in black, and then the RL10 is in light blue. So you see that's the one that changes the most. The RL30 is the health of the market, and then the RL90 is the health of the market on the weekly basis, essentially. So the RL90 shows you what the broad market has been. You can see that it had an exceptional move up where it got to 3.5 Z that terminated somewhere around in here. And then it started to slow down a little bit, and that's why that Z-score started to diminish. And part of that was the success was so good that it no longer became abnormal, and that makes the Z-score come down. But right in this first block, I want you to notice, you have the RL90 as the highest and then starting to diminish. You have the RL30 rolling over, and you have the RL10 at a peak, and then it drops. So when those conditions happen, when the short-term RL10 drops and is out of the yellow, you got a price move that looked like this, from well above the dragon, well above the river, all the way to the bottom of the river. So there was that sell-off all the way across the river. After a long period of upward moves, these conditions, when it could no longer hold, the RL10 collapses, it drags the RL30 with it, and that makes the RL90 decay. The next time that was the case was in this block. You had the RL90 as the highest, higher than the 30, and so it's starting to decay. The RL30 starts rolling over, and the RL10 drops from a high point all the way through the river down to minus Z3. And you get, once again, price above the river crosses all the way below the river before it recovers and then rejoins. In each case of these sell-offs, when that RL10 is advanced and collapses and the RL30 is rolling over, you get sharp sell-offs and then accelerated recoveries. That sounds like swing trading, doesn't it? It does. So here's the sharp sell-off, rapid recovery. Sharp sell-off, rapid recovery. So let's fast forward to where we are right now. The RL30 is nothing special, but also starting to roll over. The RL10 is in an advanced stage and starting to roll over. And the RL90 is running out of steam. So if this behaves like the three previous cases, then we would not be surprised to see the RL10 collapse and then have price move all the way to the bottom of the river. If price moves all the way to the bottom of the river, what's that price look like? It's a move back to about probably 360. So we're going to go back, or 370. So we're going to go back and take a look at the market health check to see what that kind of projected move would look like. Oh, that would look like this kind of a move where it falls all the way to the bottom of the river and maybe slightly beyond. And that means a price move of, down to 374 if it gets to the edge of the river, or, halfway will be about 371, or if it got to the floodplain, 368. So that doesn't happen in one day, but it looks like this kind of a big move could be baked into that cake. So how big is that move? It could be just like this. Same size. This size of a move from that rollover point, when it gets weak, if we just project that from here, gets us down into this price level around 375. So that's why, in my view, knowing where your stop is in order to preserve whatever gains you've made in here is so crucial, because that's the move that you're trying to protect against, the Z-1 adverse move. And then if you see that, the normal recovery has been, that's what that rapid recovery looks like after every excursion across the river has been followed by a rapid recovery. So we want to be mindful that we are in a critical state up in here. So that's what I want to say about that. And that's an important lesson. That's part of the market mosaic. That's market classification and analysis. Okay. All right, let's shift gears, get into some short terms intraday stuff. Okay, so let's see who we have on deck tonight. Yeah, Lisa, you had to leave a little early yesterday. Are you ready to do one? Okay, so what we have here is a, this was the opening of the day right here. And yesterday it closed with a nice consolidation vicinity, the VWAP. Today it opened where it closed, and so the VWAP came right down. First 4, 5, 6, 7 minutes just stays inside this nice tight channel. And so it's weathered the storm. And now we've got a Z3 pinch in play on this volatile stock. So we have price right here on the yellow dot. 1 is a Z3 breakout to the upside. 2, it clears yesterday's VWAP. 3 is like a symmetrical entry above. 4 is a Z3 breakdown. 5 and 6 are the symmetrical price levels to the downside. And so that's our yellow box. That would be a full box right there. This would probably be half a box right there. Awesome. Look at that eyeball on it. Okay, so give me your feelings. What do you feel? Long 1 and 4, stop at the dots. Second position at 2 and 5. Okay. Yeah. Let's just play 2 positions today, and we're going to say you had some other thing going on, so your risk allocation was up to 2 positions on this one. Okay. So we'll see if that changes the way you trade. I doubt it. But here we go. Okay. So those of you at home, lock in your plans. Lisa's going to do. She's going to do a 1 and 2, 1 and 2, and manage the trade, and 4 and 5, and manage the trade, and her exit is the dots with half a box. Okay. Let's see how it goes. And so let me just say that on an intraday basis, at any time during the day, if you see that Z3 pinch occur, it matters for later framing where the peaks and the valleys were, so you can estimate probable moves. But any entry into this critical state, if you got 20 bars of sideways chop and a tight Z3 pinch, that's just a coiled spring ready to break out. That's the essence of this idea. So you got your 2 positions in right away. It's above yesterday's VWAP. And off we're going to go with an expanding range and closed very strongly at that price level. We'll call him the yellow dot just for ease. And where do you like your stop? No lose plus dinner for 2 on the entire position. That would be a 1 bar low. If you did this one, you'd have like 1 R and some change locked in. The lower one is no lose plus dinner for 2. The top bar is 1 R. Which one you like? 1 R and change. Me too. 1 is a nice round number. So you had 3 minutes of open risk. And that hits your exit right there. So +1. You want to reframe or stop and reverse on the RLXD with a tight stop? Reframe. Okay. This is what for the top. That's the top is now on the RL10 peak, or you can put it on the top of the dragon. Which one do you want? Top of the dragon. All right, on the bottom side, it's anchored right now on the VWAP. Your other choices could reasonably be the Bollinger Band mean, today's opening, Z-1, or low of the day. Bollinger Band mean, okay. That kind of correlates to the size of your previous risk box. Was this? That's almost the size of the original risk. If you chose half a box, you would look. It'd be a little bit tighter stop, but that's what half a box looks like. Your previous box was this, So you'd have to tighten that up just a little bit if you wanted to use half a box. Okay, we use half a box. And now let's frame it for your second position. On the upside, so that first green line is your 1. You might have, top of the RL10 would be here. The Z3 might be there. So do like 2 or 3. And then the downside, yep. So you want to do that was your 2 there. You want to do 1 and 3. Okay. And then on the downside, first position would be here. Second position is probably, second position is probably the belly of the dragon, and then probably low of the day. Is how I would auto frame that. I'd go like 4, 5, 6 for considerations. So if that's the case, where would you want your, I know you're short at 4, do you want 5 or 6? So you want your second position at 5, okay? Yeah, all righty. So, okay, that's the plan. I'm with you. And then half the box. Okay, understand. How confident do you feel on the, so I'm doing a lot of these trade frames for you, aligned with the way you normally do them. How confident are you about building those frames for yourself with a blank chart? And same question to the rest of the team. I mean, this is essentially what we do on the weekend reports too, where we're looking at swing trades and some day frames. But that's actually a pretty good exercise to get those in and to answer the questions, the 7 trade framing questions. That's the key of doing these things quickly, decisively, systematically, consistently becomes the same way a carpenter lays out his tools and puts his frames in, making furniture. Same thing. Okay, here we go. Okay, long 1. Stop is the red line. Feeling pretty good? Is that about no lose? Like belly of the dragon maybe, or the spine, or the Z1. Something like in here, maybe 3-bar low. See, this is one where I would look at it and consider as an alternative, since I'm going to get long at 3 anyway, and it had a little doji action here. Let me show you what that looks like a little closer. You know, another thing to consider is just put the entry on now, and instead of being a stop here, just tighten up that stop, and then put the second position on. Just put the second position on right now. Just do it. And then if it fails, you don't lose much at all. But if it does go through the green line, then you got your entry here instead of here. So it's just something to think about. So you want to give that a try? Let's try that. Hopefully I didn't screw you over. Look at that, huh? Accidental, but that's sort of the idea. Sometimes good things happen to bad people. I like to think. So now what we do is look at the advantage of the second green dot compared to this entry. You know, that's basically almost an R difference. You just improved an entire execution R. See what I mean? So when you see those little short-term hesitations, half the time it'll keep going up, so why not just get it now? In fact, it may be your buying that helps drive it north. Who knows? Stranger things have happened. So and then the fact that you have such a nice tight stop, you're not really risking much at all. You were risking a quarter of an execution R. That was trivial in terms of position size R. So now we're here, and now price went all the way up the stack and now starts coming down. Now you can actually legitimately think about taking that as an exit, because that's about 4R. So what if you did this? If it's going to come here, I'm going to get out anyway. So how much are you really risking? Oops. You see what I mean? Why not? I don't know if that'll work, but it's exactly the same logic. Oh, so it didn't matter. You end up getting out. The amount that you lost on that third entry was trivial compared to the potential for a move to Z3. So let's count it up. You got 1, 2, 2.5 plus a half is 3 minus. So you got +3 on that one. So you were +1 on the first one, +3 here. So you're +4 for the day. Okay, well, you'd still have the same stop there. So let's not put this one. Maybe you harvested a position from the other one. Don't be a smart ass. All right, so just on 2 positions, you still net 4 because the third position was kind of irrelevant. Okay, so there we are. Ready to reframe this one? So if we just straddled price with the standard box, the bottom would be at the breakdown of the dragon, and the top would be at a new high of the day. That almost feels compelling, right? Like this, like that, like this. Just using our standard carpenter's forms, right? I might almost make the argument that if it broke out above Z3, you could get that second one in pretty fast, right? And see, the second red one would probably be a PSAR breakdown, which would be, by this time, would be right about there. So maybe something like that. So 1, 2, 4, 5. Does that look okay? There's our long entry. Here's our stop. There's our trade beginning. That was close, but didn't hit. There's 2. Probably maybe here. Probably in here, something like that, I bet. All right, so that gets you, thought it was going to be better, but that's like 1.5. This one is 1, so that's about 2.5. So that's, you're at 6.5. That one is pretty tight. I would call it, maybe if you took that one, you'd probably be at 7. Like if you took that, that'd be pretty tight, but that's reasonable. So you're at about 7 for the day. Reframe. Now price came all the way down to here, I think. Let's see. Yeah. All the way down to there. What do you want for the top of the box? You could do top of the dragon or top of the RL10 or intraday high. Top of the dragon. Okay. And downside might be actually that 1 bar low is probably pretty good. And then what you just use is use the entire box instead of using the dotted line. I think use the entire box. That would keep your position size approximately correct. This is what we're looking like so far. That's +7 and reframed. And your target is back to the, like the VWAP. So what you're looking for is if this thing fails, the move is back down here to the VWAP, would be the least surprising move. And then if that fails, it's back to the fair value and Z minus 2, and then Z3, which takes you back over to today's opening. So that's been the move. And there's your isosceles triangle, or your right triangle. Right triangle, it's not isosceles. Okay? Because geometry, man. I was told there would be no math. So you're long, surprise. You were thinking that would be short, didn't it? I thought it was going short. I'm wrong all the time, though. That's probably a sign it's time to lock that in. Just keep one position. Exit. You could feel that thing stalling and protected you against the recovery. So you get about another half an hour plus some other change, maybe eight for the day on, and this was Virgin Galactic. And that's a move that started from like 54 and went all the way up to 57.5 by the time it was done. So that's about almost an 8% intraday move. Okay, nice. Chi Wing Chong, are you ready, sir? Okay, here we go. Let me back up just a little bit so we can see what's going on. Okay, so we had a peak that almost got back to the VWAP, and then a significant sell-off, a harsh winter, if you will. It broke below the Z3 and pushed all the way down here. So spring went into winter, collapsed down into here. It gave us basically, what would we name this pattern? Since we just had the VWAP or the PSAR flip. SSC, so you want to be long at 0. Not waiting. Long at 0. Second at the BB mean. So second position here. And let's keep it at 2 positions for manageability. Yeah, okay. So that's going to be our risk. So any violation of that yellow box during the day is instantly short, right? So 4 is always short, no matter when it happens, no matter what else happens. So we're 2 positions in. You're basically at -1 right now because you're back to scratch at the 0 line. What do you want to do? Hold what you got. Okay, it made the recovery, so you got your second position in here. And we are 3 dots above. So maybe that locks in 1R right there. So that one would that one would scratch the second position. So that locks in 1 full R. And then if you did something like this, would be the that would be the piece R extension. If we did that, so whenever the piece R extension picks up, we might raise it up, but otherwise we lock in, maybe lock in that move right there. How's that sound? Or, okay, yeah, move to the belly of the dragon. Well, that's the belly. This is the lower skin. So the lower skin is what I'm recommending, like a 2-bar low. Okay, we'll see how that goes. So we're locking in 1. If that's the worst thing that happens to us, that's not a bad day at work. Oh, that's pretty good. So now notice that the piece R extension, instead of being here, actually now looks like this. And we're looking at targeting that is our hopeful target up here. Is the put a yellow dot up here. It's easy to see. We actually are hoping to get that. So we might just slide this up, and since it's rolling over, we might just make that a tight stop at the skin and just call it that. And then if it continues to advance, if it stays in this space and starts moving up, then we would just use this as the trailing stop as a piece R extension. Okay. And then I'll let you take this exit if you want. Oh, actually, the piece R extension now, it goes like this, but then it becomes this. It's starting to chill out a little bit. So if you're using the piece R dots, it's now looking like that. Is that still okay? Or maybe the southern skin of the dragon would give you this. Okay. So we're not giving back much with that adjustment. So now we got our eyes on the prize up here. There's sort of that's the RL270 fair value at Z2. Here is the VWAP at Z3. Our stop had been here, and we were just kind of riding the piece R up to here. It now feels like we could do this. As we're getting closer and closer to the station. Okay, or Z1 would be the spine of the dragon. That's reasonable too. Yeah, so what we're given back if we do that would be, this much. but we're keeping this much on the first position, plus we're keeping this much on the second position. Which feels pretty good. Against an initial risk of this yellow box, we're probably holding 3R. If it hits us, we net 3R, and we're only giving back less than a half an R, or maybe an R at most. Okay, so we're in pretty good shape. The summer has turned back into fall. The RL10 has rolled over across the baby dragon at the descending RL270. VWAP remains solid up here. This feels like a nexus. Our stop right now is here. If you move that up to the PSAR, it's right there. How's that feel? Pretty good? And that's also Z1. Okay, so be it. Has one more burst of life at least. So maybe that locks in the spine, or that's the new Z1 right there. How's that feel? Okay. Getting close to the VWAP. Up maybe spine of the dragon. Which is basically Z1 also. So the new PSAR looks like this. You can see that we're coming to a critical decision point here. But you've given it room to run, but the amount that you gave back is not that great. So take a look at how much more we've added to the gains. This much and that much on those two positions. So that's pretty good. So we end up probably getting hit at Z1, probably like right there. So when we map this out, this was here's our risk box. Right, so that is 1, 2, 3, 4, 5, 6, 7. So that's plus 7 on this trade right here. And pretty carefully managed all the way through with the SSC. And that doesn't give back very much, does it? And that's in blockchain. Blockchain ETF. Now, what makes this interesting is that the magnitude of this drawdown was like 3 times the size of that arrow, but I didn't want to scare you out of the position. So if we look at blockchain, the intraday, yeah. Let's see. So the trade that we just worked Started off with, let's see, what was it? Started off here. And we got tricked into that second position, like right here. This is where we had to have the courage of our convictions when it pulled back to break even, or -1. And then just staying with our original stop, you were able to get that as the exit. But notice all that did was got back to the VWAP. So here was the VWAP collapse. And the size of the trade that I showed you, it only started like from right here. It started from here. So this was the negative assessment that you saw. You didn't see all of this, but that makes this this supported spring crossing even more prominent. And even if you don't take that one, I want you to recognize that this is Kata 2 entry, right? With a support level here and a support level here. There's your rising supports. And then this would be your initial risk box on Kata 2, and you end up getting that same trade. And the managerial exit or the sniper exit with the PSAR gives you that squared away trade and exit management strategy for 7R. So those are the two trading cases for today. Well done. And we didn't even trade this piece. And you can see that's a Z3 breakdown and a couple collapsing dragons. So that could have been 15R, on the trade down plus then the trade back up. That was a reasonable, 15 would have been reasonable on that one today. That's why this is an interesting trading vehicle. Okay, so well done. Good job, both you guys. I'll get this published and posted, and we will be ready for them tomorrow on Friday. Hey, Lisa, is the market open or closed on Monday for the President's Day? Do you know off the top of your head? If it's closed, that makes tomorrow's price action even more important because people are going to have to hold positions for 3 days of news. So a sell-off tomorrow would be the least surprising move to lock in the gains of the last 10 days, some kind of tactical covering. So, I would be ready for that move for a short-term adverse bounce. So VXX and IW and the Russell will be on my short list. Okay? All right, take good care, guys. See you tomorrow.